Let's jump right in. It is so incredibly easy to assume that to start investing, you already need to be rolling in cash, right? But when we take a closer look at how millionaires actually build their wealth, a really surprising pattern emerges. And spoiler alert, a lot of the world's most successful millionaires did not start with millions in the bank. They started with one simple, fundamental decision. They decided to invest consistently. So today, we're going on a highly focused journey in this explainer to completely demystify wealth building and uncover the exact habits you can use to secure your own financial future.
Okay, let's dive into this. The single biggest myth holding people back from securing their financial freedom is this pervasive, totally false belief that investing is some exclusive club, reserved only for the already wealthy. That is simply not true. It's a psychological barrier, not a financial one. You absolutely do not need thousands of dollars just to get a seat at the table. And honestly, once you shatter that illusion, a whole new world of opportunity opens up for you.
So let's look at Section 1, the Great Wealth Myth, and the critical difference between saving and investing.
Let's anchor this with a super relatable number, all right? $100. Imagine, just for a second, setting aside $100 every single month. For a lot of us, that's money that easily gets lost to, say, a couple of casual dinners out, or maybe that premium streaming service you completely forgot to cancel 6 months ago, but hey, you're somehow still paying for. So what actually happens to that $100 over the long haul? Well, it depends entirely on the vehicle you choose to put it in.
You basically have two main options here. The first is saving. Now, saving protects your money. Sure, it's safe and sound in a bank account, but here's the catch. There is this silent thief called inflation, and it slowly, consistently eats away at your purchasing power over time. $100 today literally will not buy the same amount of groceries 10 years from now. Your second option is investing. Now, while investing always involves historical risk, it provides the actual opportunity for your money to grow and potentially outpace that inflation. That is exactly why financially successful people choose to invest rather than just hoarding cash under a metaphorical mattress. Put simply, saving protects, but investing expands.
Moving right along to Section 2, the power of time and why consistency matters way more than perfection.
There's this great old saying, the best time to plant a tree was years ago. The second best time is today. Building the habit of consistently putting money away is your absolute most important first step. Look, you might be kicking yourself for not starting your investment journey 5 or 10 years ago, but the reality is, small investments made consistently starting today can grow into a massive forest. Don't let the regret of yesterday stop you from planting your seed today. And this brilliantly illustrates exactly how that tree actually grows, through a phenomenon called compound growth. This is widely considered one of the most powerful concepts in all of finance. It's basically when your money earns returns, and then, and here's the magical part, those returns generate even more returns over time. It creates a massive, unstoppable snowball effect. The earlier you start, the longer that snowball has to roll down the hill, gathering more and more momentum. When you invest, patience isn't just a virtue, it's honestly your single biggest financial advantage.
But wait, you might be thinking, shouldn't I just wait for the market to crash so I can buy in at the absolute bottom? Actually, the reality is, consistency matters way more than perfect timing. So many beginners get totally paralyzed by anxiety, constantly waiting for the perfect moment to invest when prices are at rock bottom. But the harsh truth? Nobody consistently knows when that perfect moment will arrive. Trying to predict market movements is just a fool's errand. Instead, long-term investors win by regularly and consistently contributing, completely ignoring whether the market happens to be up or down on any given Tuesday.
Which brings us to Section 3, avoiding beginner investor traps and how to navigate all that noise.
The absolute first line of defense is your own education. You should never, ever put your hard-earned money into something you don't fully understand. Before you risk a single dollar, ask questions, read up, watch educational explainers like this one, and really learn the basics. Understanding the risk you're taking on is just as crucial as understanding the potential returns you might get. In the investing world, knowledge is literally the ultimate shield for your portfolio.
So, the crucial point is, you have to actively avoid 3 major beginner traps. Number 1, investing based on social media hype. Just because a stock is trending online doesn't mean it's a smart addition to your portfolio. Number 2, trying to get rich overnight. Real wealth building is a marathon, guys, not a sprint. Chasing quick money usually just ends in losing it. And number 3, fear-based selling during market declines. Markets go up, and markets naturally go down. Successful investors focus strictly on their long-term goals instead of emotionally hitting the panic button every time they see a scary headline.
And finally, Section 4, the millionaire mindset. This is where discipline reigns supreme over shortcuts.
Let's break down the actual day-to-day reality of how millionaires operate. They invest consistently, month in and month out, without fail. They continually learn about finance and the world around them. They fiercely avoid unnecessary consumer debt that just drains their resources. They focus relentlessly on growing assets rather than buying liabilities. And most importantly, they let time work in their favor. They aren't constantly searching for some secret cheat code or a quick fix. They rely purely on patience and smart, steady asset management.
And this brings us to the core takeaway of our entire explainer today. The single best investment you can make isn't a specific trending stock or some shiny piece of real estate. It's in your own financial education. You don't need to know every little thing to begin. You just need to start small, stay incredibly consistent, and keep learning and adapting as you move forward.